Hello everyone. Welcome to the Stock Minds web channel. Trip.com Group, Nasdaq TCOM, has delivered encouraging signs of both robust growth and solid value in its Q1 2025 earnings report. As global travel rebounds and digital booking platforms regain momentum, TCOM is showing increasing revenue, strong margins, and valuable top-line and bottom-line expansion, even as current valuations remain reasonable. In this video, we will dive into Trip.com recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Trip.com. Founded in 1999, Trip.com Group Limited is a leading global travel services conglomerate headquartered in Shanghai with major offices in Singapore. The company operates a diverse brand portfolio including Ctrip, Trip.com, Qunar, and Skyscanner, offering accommodation reservations, transportation booking, package tours, corporate travel management, travel content, and experiences. With a presence across 200 countries and content in 40 languages, TCOM is among the world's largest online travel agencies. Listed on Nasdaq since 2003 and added to Hong Kong Exchange in 2021, it employs over 40,000 people and continues to expand its global footprint. Trip.com financial performance. Trip.com Group delivered a solid financial performance in Q1 2025, underscoring its continued growth momentum. The company reported quarterly revenue of $1.9 billion, marking a 15.6% year-over-year increase from $1.65 billion in Q1 2024. However, quarterly earnings per share, EPS, slightly declined to 84 cents, down 4.55% compared to 88 cents a year earlier. On a trailing 12-month TTM basis, revenue reached $7.6 billion, a 16.29% increase from $6.54 billion in the previous year. TTM EPS showed exceptional growth, climbing 50.45% to $3.37 from $2.24. Reflecting improved operational efficiency and economies of scale. The company maintains robust profitability with a gross profit margin of 81.06% and a net profit margin of 30.84%. Its financial stability is further evidenced by a return on assets of 6.87% and a return on equity of 12.44%, along with a conservative debt-to-equity ratio of 0.29. Over the past 5 years, Trip.com revenue has been growing at 29.7% CAGR, and net income has been growing rapidly. 2023 make a pivotal year as the company recovered from 2020 COVID-19 crisis. Trip.com Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue of $8.54 billion, representing a 16.19% increase from 2024's $7.35 billion. The non-GAAP EPS for 2025 is projected at $3.52, a modest 2.92% increase from $3.42 in 2024. Investor sentiment remains optimistic, with analysts assigning a strong buy rating and an average price target of $76.60. Suggesting a 30.56% upside from current levels. The highest target price stands at $96.36, implying a potential 64.23% gain, reinforcing confidence in the company's long-term growth trajectory. TCOM stock price performance and valuation. At the time this video was created, the stock was trading at $58.67 per share, representing a 23.5% gain over the past year, significantly outperforming the S&P 500's 12.5% increase during the same period. Over the past 5 years, the stock has surged 120.9%, again beating the S&P 500's 96.9% gain, demonstrating the company's long-term growth potential. Despite these strong gains, the stock still offers attractive value based on its current valuation metrics. Trip.com Group maintains a modest dividend yield of 0.51%, providing additional return for investors. Its price-to-sales PS ratio stands at 5.06 TTM, with a forward PS of 4.49. Moreover, the The company's non-GAAP price-to-earnings (PE) ratio is 16.07 TTM, while the forward PE is 16.67, which is considered attractive for a high-margin, double-digit growth company in the travel tech sector. Trip.com growth potential. Trip.com growth prospect remains robust, driven by several factors. 1. International expansion growth. Trip.com Group's international business represents its most significant growth opportunity, demonstrating exceptional momentum across all segments. International OTA platform reservations surged over 60% year-over-year, while inbound travel bookings increased approximately 100%. Most notably, outbound hotel and air ticket bookings reached more than 120% of pre-COVID 2019 levels, indicating expansion beyond historical performance. The inbound travel segment has become Trip.com's fastest-growing business, fueled by China's visa-free policies for over 40 countries and the new 240-hour visa-free transit policy. Hotel bookings from key visa-free countries jumped over 240%, with South Korea, Thailand, Malaysia, and Indonesia as the fastest-growing source markets. Trip.com's expansion strategy extends beyond Asia through Middle East partnerships with Saudia and Flynas Airlines, a 3-year MOU with Visit Oman, and Southeast Asian attractions partnerships with Sun World Holding in Vietnam and Dream Us International Holdings in Singapore. 2. Market leadership and competitive positioning. Trip.com's market leadership in China's travel industry provides a strong foundation for future growth. The company maintains dominant market share gains and effective cost control in research and development and administrative expenses. Mobile app usage accounts for 70% of international bookings, reflecting strong brand recognition and user preference for Trip.com's integrated platform. The company's one-stop-shop approach differentiates it from competitors, offering integrated services across accommodation, transportation, package tours, and corporate travel. This comprehensive platform creates significant user stickiness and cross-selling opportunities that support sustainable revenue growth. 3. Innovation investment and future initiatives. Trip.com announced the $100 million Tourism Innovation Fund at its Envision 2025 Global Partner Conference, designed to support destinations, organizations, and individuals in developing innovative travel solutions. This initiative demonstrates the company's commitment to driving industry transformation while positioning itself at the forefront of travel innovations. The company has also partnered with Travelist to promote sustainable travel options, integrating eco-labeled flights and green hotels directly into its platform. These sustainability initiatives align with growing consumer preferences and regulatory trends, positioning Trip.com favorably for long-term growth. Risks to consider. Despite the potential of the stock, we should be mindful of potential risk. 1. Intense competition. The online travel booking market is fiercely competitive, with Expedia, Booking Holdings, Agoda, and Airbnb challenging Trip.com Group TCOM for market share. TCOM, 55% dominance in China's outbound travel market as of 2024, hinges on sustained innovation and high customer satisfaction. Failure to adapt or meet consumer expectations could erode its position, especially as competitors expand their offerings and leverage technology to capture market share in China and beyond. 2. Market and economic conditions. Trip.com Group is highly sensitive to global economic conditions, geopolitical tensions, and public health crises, which can sharply reduce travel demand. The COVID-19 pandemic exemplified how such factors drastically impacted bookings and revenues. Economic downturns, political instability, or future health emergencies could similarly lead to declines in consumer confidence and travel spending, affecting the company's financial performance and growth prospects. 3. Regulatory risks. Trip.com Group operates under complex and evolving regulations in China, including data privacy, consumer protection, and online commerce laws. Changes in these regulations could increase compliance costs and limit operational flexibility. For instance, stricter data privacy rules may restrict Trip.com's use of customer data for marketing purposes. Additionally, Uncertainties in the interpretation and enforcement of these laws pose ongoing risks to the company's business and governance practices. Conclusion: Trip.com Group stands out as a strong investment candidate, backed by solid financial performance, consistent stock appreciation, and attractive valuation metrics. The company continues to deliver double-digit revenue growth and international expansion growth while maintaining a healthy balance sheet. While potential risks such as economic fluctuations and competitive pressures exist, the company's market leadership, diversified platform, and global footprint position it well for sustained success. For long-term investors seeking exposure to the travel and technology sectors, Trip.com Group presents a compelling opportunity to benefit from both its continued growth and solid valuation. But remember, this is not a financial advice. What do you think about Trip.com Group? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.